right there.
Hi, Erin. Nice to have you. We're in a different environment than we were last time. I'm not seeing.
Yes, we are.
Yeah, so see, all you have to do is wait for a little bit of time and things will change. We get frustrated. But what a January effect.
Yes, it's been a great January for sure. I know that I've been enjoying it mostly. Of course, we've had those little pullbacks in between, but it's looking pretty good. And it's interesting listening to you guys talk before because about, there always being another trade, that sort of thing. I always tell subscribers that because, you have to make sure before you get into something that all of everything in your analysis process is on. You know what I'm saying? Like you have to be, everything needs to be right. And it's really been hard in the bear market, obviously, for that. I know I've been exposed very little to the market, and I do share that with my subscribers as well at decisionpoint.com. And it's been an interesting January for sure. But, another thing I've been telling my subscribers is we need to trust the technicals. The sentiment has been all over the place.
Yeah.
And ultimately, and there's all of the news with the Fed and all of that, a lot of noise going on. I'm a technical analysis purist. I know that there's some good stuff about that and some bad stuff about that. But, I have to trust those technicals. And in spite of what I'm hearing around, as far as the bearishness that's been creeping in, I just have to trust my technicals and they're looking pretty good. I'm not going to, we were talking again, that stock trade being perfect. Everything is not perfect right now, which is why I'm not exposed more than 18% right now.
Okay,
so,
what are some of the missing elements that gnaw at you a little bit, but not enough for you to lose your conviction about what you're doing right now? What's in the back of your mind that you're thinking about that would make the technical case even stronger? And it's not because of it not being perfect. And there's, when is everything perfectly lined up all the time with everything?
absolutely.
You wait for the
It is true. I have certain things though that really need to be lined up, kind of those primary indicators that I use. And you can get the majority of them to be where they need. I'm liking my indicators, except for the fact I have so many negative divergences right now.
Okay.
And typically when I get negative divergences on my indicators, things are weak and things could get much weaker. The thing is that we've entered this bull market, textbook wise anyway, the 20% gain on the S&P, and so you have to trust the technicals in that if you are truly in a bull market, you don't have to have everything perfect because generally the bull market overrides so much of those divergences and things like that. So I'm kind of a little on the fence here because, it's a bull market. And so I have to, trust that, okay, well, I might see some negative divergences, but it might be okay because of the fact that we're in this bull market phase right now.
Okay, can we take a look at what you're seeing? The share screen is at the bottom.
Oh, I'm so sorry. I didn't know I had.
It's a green button.
Oh, yes,
down there. And when you're talking about divergences, are you talking about divergences with momentum indicators?
Some of those, yes. Let me show you my short-term indicators because this is probably the chart that has me the most worried. And I apologize, it's so small. So let me see if I can make it a little bigger there.
Okay, there's the SPY.
Yep. Okay. So as you can see, I have these negative divergences in, and my indicators are moving lower. So that is a big problem. Yet price is ignoring my indicators right now. You know what I'm saying?
PMO,
like they're moving lower.
Yeah.
And so that's a bit of a problem. But at the same time, on the other side of it is that, yeah, these indicators are moving lower, but price is having no problem moving higher. And so that's kind of where that bull market phase versus bear market and what you're in, what you have to trust. So I would love to see these indicators turn back up. And we've had a little bit of mixed readings on the way down, with some of them being higher and some of them being lower. But this is the chart probably of all of my charts that worries me the most about the S&P, because I do have negative divergences all the way down. But
Okay.
let me show you that there are some positives, though. I'm going to get
And,
my
I can
bias.
personally attest to, when you're in a bull market and you're getting momentum divergences, that you could have 100 of them before you finally get a reaction.
Right. And so that's why I have these primary indicators, the ones that I have to trust, that I've watched work and not work, sometimes. I mean, they're not, none of them are perfect, but that is the case. I have to have the primaries, because you'll find, well, and let's be honest, you can find what you want to see. I mean, you can decide, I'm really bullish, so I have to see everything in terms of with those rose-colored glasses. And sometimes we fool ourselves into thinking that things are one way when they're not, because we're biased in our thought process.
And if you can't find it, you'll go look for it.
Yes, absolutely.
You'll go look for a reason to rationalize why you're
And
why
let's
you're in a
face it, you
position
can
that's not
always
working.
you can always find a chart.
Yeah, or someone that agrees with you, and only
Yes,
listen to them. And that's
that is
why,
true.
that's why I say, keeping an open mind will keep your account open.
Yeah, absolutely.
So,
And you have to be careful of too much noise too. I mean, I have certain people that I follow. I could follow so many other people, but I have to keep that. I have to keep the grouping kind of smaller, just because I have people from all different areas, but I have to keep it smaller so that I don't get too wrapped up in what everybody's saying, and then the noise becomes louder and louder. So it's great to just have those few that you trust. And fortunately, my subscribers have picked us for one of those.
yes. Do you have a view on the miners? They've had tremendous runs, things like Newmont and almost any gold share. And and here we're in a pullback phase. Do you think that the pullback has legs, or it's just going to be a little blip down here like we're seeing?
I think it will have legs. And part of that is because, gold is under pressure. You guys were talking about the dollar. It fell. Remember, we had the big discussion. It was like, well, is the dollar going to relax a little so we can have a market that does well? So the dollar is starting to come out of its malaise. And, so that's going to put a lot of pressure on gold, obviously. And I'm seeing that. Gold is holding up, though, but that's a whole nother discussion. Gold miners, the problem I have is I have indicators that go deeper under the surface. Okay, so I have indicators, the stocks above their 20-day EMA, the stocks above their 50, stocks above their 200. And then I have what's called the Silver Cross Index and the Golden Cross Index. And these tell the story for me. This is the big story, though, with gold miners. Look at the participation that has just dropped off the map right now. I mean, we had 100% not too long ago that had price above their 20-day EMA. And now look at it. We have 7%. 55% with price above their 50-day EMA. We had 100% just a few weeks ago. That's some serious deterioration under the surface. Now, my Silver Cross Index and Golden Cross Index are still holding up, but they move a lot slower. The deal is, though, with the silver cross index, and I should explain what these are. I don't know how much time I have, but basically, a golden cross is a 50 and a
Right.
200-day crossover.
Right.
Silver cross is a 20 and a 50-day crossover.
Oh,
And these
interesting.
indexes tell me how many of those gold miners have a 50 above their 200 and how many have a 20 above their 50. And those numbers are still pretty high, but you'll notice that we just got a negative crossover on our silver cross index. So that's a bad sign. Typically when you get those downside crossovers, particularly in overbought territory, that's bad news. So I know I had a gold miner. I was holding the junior gold miners, GDXJ, and I did shed that position 2 days ago because I just didn't like that breakdown. And then the quick thinning of participation. I mean, the two put together, it just tells me things are a little too shaky.
Okay. We had a nice little break in the crude, and the energy sector was really the star last year and really diverged from the price of the commodity. But we had a nice big up day in WTI yesterday. And, I would think that the oils still have a chance to be part of this bull market that you're talking about. Your view on XLE or
Yeah,
individual issues
so
in there?
I think USO is a good place to start. If I can, I don't
Okay.
know if I can my chart bigger here. It doesn't want to do it. I apologize. The chart won't get
That's
bigger.
all
There
right.
we
I passed out magnifying glasses.
go. Okay, good. I have my reading glasses on.
All
So.
right. Okay.
All right. So USO, has decided to rally because I went pretty much all in on Monday, negative on oil.
Okay. Yeah.
So,
Because it looked
and
like it was breaking down. Yeah.
it
WTI
really
looked like
did.
that. Yeah.
It really did. And, the primary indicators, the RSI, the stochastics, uh, were really in the tank. And stochastics, though, I have to say, I mean, they were in the lower part of their range, which is really a bad thing. But we were starting, it was oversold, if you will. So, but I just didn't see it going on. And now we're having our second day with a big time rally. The one thing, though, about oil, and I'm looking at USO, the one thing about USO is that it's just in a trading range right now.
Yeah. Got
I
it.
just I don't see it going crazy for a while. I just
It's so
don't.
much weaker than XLE. Is there a reason why? What's the composite of USO compared to XLE is a much stronger
Well,
chart, look, isn't it?
yeah. Well, a lot of stuff in energy is due to oil, but we do still have those areas in oil or in, I'm sorry, in the energy group. And this is a great industry summary here. But
Okay.
you have all of these things that are related to oil,
Yeah.
but you still got coal. And coal is starting to take off. And I think that is going to be kind of the story under the surface here for energy. You have you can look at these industry groups. And again, I know it's small. You can look at each of these industry groups and see that, there's problems here. That's why the energy sector is still kind of struggling here. But let's remember, it wasn't too long ago. I mean, energy was, just killing it. And oil was just not doing anything.
The
I
opposite
mean,
direction, in fact.
yeah, it was absolutely,
An
stunning, really.
anomaly that I haven't seen in my career.
Me either. And
Yeah.
mine's pretty short. Well, at least I like to pretend it is.
So some of the stars recently have been tech, semiconductors, tech, even big tech starting to catch a bid. Where are you with, say, semis?
Semis, I'm really liking semis, and it's interesting that you bring this one up. And let me get to where I want to be here. So one of the things we did is I just showed you that silver cross and golden cross index. We've
Right.
added that with those under the hood indicators. So I have now a golden cross and a silver cross, golden, silver, and then those stocks above their 20, 50, and 200-day
They
EMAs.
all
And
look
this
good.
tells such a great story. This
Yeah.
is a totally different look in comparison to gold miners.
It's the opposite.
Completely different.
Yeah.
100% with price
Yeah.
above their 20 and 50. 92% with price above their 200. You have 100% with a 20-day EMA above the 50-day EMA and semis. They are just killing it. And I don't see any weakness under the surface yet. It's just getting stronger. Look at the Golden Cross. It's now moving. The Golden Cross index is just straight up moving. And this indicator is a slow mover. It's a tank and it takes forever to move, but it is really starting to take off. I like semis. I like technology. And that's why, another reason why I expect the S&P to continue higher. I mean,
You're
when
looking
growth
for new all-time highs in the S&Ps, Erin?
no, I'm not there.
Okay.
I
Because
see this as a
go ahead.
cyclical bull market within a secular bear. And I don't think
Okay.
secular bear is going to go away for quite a while until we get things, shaped up in the economy here. And of course, globally, until things start to settle down. I mean, I just don't see, we've got a housing bubble out there right now waiting to be burst. There's plenty of things, the interest rates, all of these things.
That's a
Problem.
great segue because, a lot of people are anticipating, because they believe inflation has peaked, that yields are going to be heading down. I thought last week's action after the employment report and then following through, even though yields are down a few bips today, that to me it looks like yields aren't headed lower, that they're going the other way. I'm wondering what you're seeing there.
I absolutely agree. I do see them moving higher. I think we're kind of lucky right now. Let me see if I can get this yield
There's a
array
10-year.
there.
Oh, yield array. Okay.
Yeah, so
All right.
it's if I can, again, I want to get it bigger. It won't do it.
I mean, this last period from October, November looks like more of consolidation of the big up moves that we had last year
Yeah, absolutely.
than any kind of topping formation to me, at least
Yeah.
right now.
So yeah, it's my yield array. So I have all of the yields on here. This is the longer term one. So we're looking at, wow, back to 1962 on this particular chart.
Yeah. Yeah.
And you can see that declining trend, and things got stupid silly, really, as far as how low these interest rates are. I mean, this is not a normal range. I mean, we are in a more normal range right now. I mean, interest rates near zero is people are thinking that's just the norm, because look at what it was from
It was the emergence. It was an emergency that lasted for 20 years.
Exactly. Yeah, the firemen never left the building after they put out the fire.
Yeah, they kept pouring the water.
Yeah, exactly.
Filling the punch bowl with their hoses. So,
exactly.
All right. So then you think yields, maybe that's another sticking point for us not entering. A lot of people are declaring a new bull market. Is that, don't you think 4% yields would change a picture of some of the techs and growth stocks that are performing now?
Well, certainly. And that's part of the problem, isn't it?
Yeah.
So, growth and tech, the interest is there. But as you say, I mean, the interest rates are not, I mean, they're at a normal range right now. I think people just don't get that. They're still low, honestly, in comparison to, back when we were buying houses like 20 years ago, 30 years ago. I mean, and things were pretty normal back then. This is more of a normal range. We've been playing around with these interest rates for so long.
Yeah.
It's ridiculous. So yeah, that's going to put higher interest rates will continue to put a damper on what's going to go on in the longer term. And I
Okay.
wish I had brought my chart. I have a chart from back in the 1920s to 1930s. And you can see that there was a bear market through that entire time, but you had these rallies of 45, 50%, on the way down. That's
Yeah.
what I see is we're going to get these rallies of, at this point, we're up 20%, not quite because we did fall below that. I would be looking at closer to another, I think you could go another 15, 20% to
So
the
around
upside.
43 to 4,400 around the August highs. Would that be
Absolutely.
it? That's kind of
Nope.
the area I'm looking at, the
That's
last
I'm
August
totally in
highs.
agreement.
Gotcha.
So
See, well, I put a camera in your office so that I could, have the same type of technical views as you
exactly.
when you came out. Anyway,
That's why
but
you
give me,
invited me. I'm telling you what you want to hear.
no, I invited you because you're giving me confirmation of some of the narratives that I'm working off of right now. And I think
Right,
that's, gives me more conviction hearing it
right.
from people whose work and methodology is different than mine. Drawing the same conclusions actually does build the conviction I have on positions.
Well,
So,
excellent
yeah,
to hear.
yeah.
Yeah, I agree. I
Okay.
definitely agree. It's been a
Anything you want to
pleasure.
anything you want to wrap it with, Aaron?
Well, I don't know how much commercial I can do, but
You go
decisionpoint.com is,
show it.
yeah, okay. So decisionpoint.com, this is my website. And, I have two reports. I have the Decision Point Alert and Decision Point Diamonds. This is the cornerstone, the Decision Point Alert. This tells you all you need to know about the market. And we just talked dollar, we talked yields. I cover those every market day. I cover oil every day. I cover bonds. And again, all those indicators and I didn't show you them all. I cover in the DP alert. And one nice thing is I cover the same charts every day. So you get to really see the movement. You get to really understand what these indicators do. And we don't bounce all over the place. So you really get what you need to know in Decision Point Alert. If you're a trader, then you want Decision Point Diamonds because I give out 10 stock picks. Actually, I give out 7 stock picks and then 3 ETFs on Wednesday, ETF day. And basically I take what I'm seeing here and apply it to the stocks and ETFs that I'm looking for that meet my requirements. And then I present those. They are stocks and ETFs I would put in my own portfolio. My portfolio is made up of these stocks and ETFs, not all of them because I can't afford to buy them all, but I wouldn't want to. So anyway, that is my website. I don't have it written out, but I am going to give all of your listeners, viewers, 50% off their first month. All they have to do is use the coupon code SAVE50, so SAVE 50. You can save 50% on your first month.
Oh, nice. Thank you, Aaron. Generous. And I was familiar with Aaron's father's work. We're from the same generation, and he's excellent. And what a great mentor Aaron had, and adds kind of the uh, you know modern edge to what Carl did. And what a nice team to
Oh
father and
yeah,
daughter. Yeah,
he was an excellent mentor. I learned a lot, and then I've applied that to, further learning, like you said, in
yeah,
some of these newer things.
yeah. And disciplined, as you can tell. She's got to have. Aaron has to see things. It's not anything that's coming. Although I'm sure she has intuition about the markets. She's disciplined because last time when she was on, we hadn't quite bottomed in the markets, and there wasn't much for her to do. And to hear her tune change, I thought was going to be the case. So thank you, Aaron, for being with us today. And encourage people to take her up on her offer.
Yeah, I'll tell you. We do also have a free trading room on Mondays.
Okay.
Stock Charts TV has got that for you as well.
And they live by the saying, you know, I did an interview yesterday where I said, you know, I like to fade news and things like that, but price is king. All right.
Yes.
Price action is king. And thank you so much for being here again, Erin. I'll get a hold of you and keep you in the rotation.
Ah, that would be great. I always enjoy coming in. It's a little early my time, but I don't
Yeah,
mind.
you and I, it's 6 a.m. right now, right?
Yes.
Okay, I hear the owls when I get up, so I appreciate you getting up early to hang out with us today, Erin.
Of course.
Erin Swenlin, and you can follow her on Twitter at _decision point. And that's her website, www.decisionpoint.com. So thank you, Erin. Good
Thank you.
hunting. Talk to you in the
That you as
spring.
well.
We'll talk in the spring.
All right.
All
Sounds
right.
great.
All right, everyone. You could join the team in 14 minutes on the morning edge. Don't just count your indicators, count your blessings. Good hunting the rest of the day, and I'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.